Do you able to hear me now?
Yes.
Okay, so your voice is also really pretty clear. Good.
Okay.
Oh, I don't know what went wrong. Well, Manish, as I said that before we start, if you can brief me something about you that helps me to see to what detailed level of demo that I need to give that I'll be able to know.
Okay. Actually, I am working on the end user side
Mm-hmm.
in credit department. So, I am familiar with dispute reduction, cash application, and
Mm-hmm.
that's my background from last 7 years. And
Okay.
we have SAP, so, and also finished SAP FICO training.
That's well and good. Well and good. Okay. See, maybe you are looking at credit collection, dispute, and maybe something else if you require. I'm not sure. But if you are there already on the credit department, you must be using SAP credit management or FSCM credit management.
No, actually we don't. They are using third party, so we don't have that, but they are looking into. So
Okay.
hopefully, when they make the decision, we will have that SAP module.
Excellent. Excellent.
But
Well,
overall, process-wise, like account receivable, I work in, so I'm familiar with
so you
dispute
said
and.
okay. You said that you also open a cash appear. It means do you work on the lockbox process?
Yes.
Okay, so when the lockbox get processed, what are the unprocessed open items, you will manually apply the cash.
Uh-huh.
Okay, that's well and good. Well, see, FSCM comes with several modules like credit management, collection management, dispute management, in-house cash, bank communication management, liquidity management, then treasury and risk management, and debt recovery, and one more. But these are all, in fact, not really important unless there is a strong business need. But credit collection and dispute management, they go together. And in-house cash typically used for a huge customer base, as well as where there are number of subsidiary companies. And there are number of subsidiary companies, they will think of going to in-house cash. And coming to the bank communication management, typically the interfaces between your business and bank. If the number of banks are more, if the data that you are exchanging with the bank is normally high, then to save the cost, then you will then your business may typically think about switching to business communication management. Treasury and risk management, this is all about corporate treasury, not a regular business treasury. Regular business treasury is about your in-house cash and liquidity management, and bank statement, logbook. These are all your a corporate level, but within the organization. But when you're talking about credit and risk management treasury, that's all about your hedging, securities, swapping, and credit analysis, risk analysis, portfolio analysis. Those are all with the external corporate finance related treasury activities. Okay. Then what I'll do is I'll cover a demo that gives what is the reason for FSCM, why we need to implement, what are the advantages, what happens if you don't have an SAP FSCM, that is typical disadvantages of your legacy applications, and different FSCM modules, and what we will cover in the training. That's all I'm going to give a demo today. Okay, we are not going to SAP system as of now, because it's too early. Without knowing the concepts, perhaps you may not be able to understand if you want me to take to SAP. If you still are looking for, but I can show you the path as well as some of the high-level navigation related processes. Okay.
Okay.
Okay. Well, I think since you were there in the in the credit department and working as end user, I'm sure most of these you're already experiencing. Day sales outstanding, high number of paper invoices, high cost of invoicing and reconciliation, and high percentage of disputed invoices, high number of days to reconcile dispute invoices. large amount of uncollectible receivables, process and systems not integrated with business partners, a difficulty in predicting cash flow. Day sales outstanding, what happens is if your customers are huge and if your systems are not aligned properly, and if you have to see that which customer has to pay more amount and for several days, then you may not be able to know if you don't have proper systems in place. Okay, and if you are using legacy approach for printing invoices, then what happens if you don't have electronic method or online method, then you have to take the print of invoices from your system. Then you should have a mechanism or its tool or otherwise the third-party system which will print and seal the envelope, and somebody has to go and put in the mailbox. Then then that has to get delivered to go to the customer, and where customer will see and start talking about that invoice, whether to make a payment or whether to raise any concern if you have any disputes. These are all typical disadvantages of your legacy system. High cost of invoicing and reconciliations. If you as well as your customer, there is a business and customers are not aligned in terms of your invoices and payments, then you spend a lot of time as well as the people, and keep spending time to know what actually the invoices, what are the payments, what are the outstanding, any credit notes, debit notes, all these things somebody has to do it manually. High percentage of disputed invoices. If you don't have a proper system where you can receive the dispute cases, assign it to appropriate people in the department, maybe quality department, maybe finance department, logistics or marketing, whatever it is. If you don't have that, then you keep doing a manual exercise, and it takes a lot of time to coordinate with the relevant people and resolve the disputes. In general, in countries like US, if the invoice is disputed, and normally you would not charge any interest as well as you don't generate any dunning notices. Okay, so there is another reason where your day sales outstanding will also go up if the disputes are not resolved on time. High number of days to reconcile disputed invoices. The invoice, as I said, that if you don't have mechanism, the number of days will be more, and again your day sales outstanding will increase and your collection will reduce. Large amount of uncollectible receivables. If you have a proper system where you will be able to generate a kind of a report or a work list, you'll be able to know that which amount is spent, how much amount is spending from which customer for how many days. If you would like to know that, you may have a system which will give that information. But if you have an integrated system, then all the systems are aligned, and you'll be able to update the data like the invoices, the payments, and you'll be able to generate the open invoices in each day, assign it to appropriate collection agent. Collection agent here, not an external one, within the organization, who is responsible to call the customer and remind them, hey, this is the invoice, these are the invoices, those are outstanding from you. So do you have any plan to make payment within few days, or if they want to call them back and remind, and if they want to give some, if the customer gives some information, then still you'll put that in your system with appropriate comments. I called up this customer says he has a dispute on so-and-so invoice, and he's going to make payment for another invoice in next 2 days. And for other invoices, he asked you to call back and remind. So many things that, the discussion happens between your collection team as well as the customer. All those things that you can record if you have a collection management module. Your legacy system is also capable of doing it, but the fundamental difference here is your SAP FIAR and FSCM collection modules are integrated, so that we will have a real-time information. And the only information that I said, like the only positive thing that I told you is a one single point out of all the advantages that the collection module has. Similarly, the process and systems not integrated with the business partners. You will have a lot of challenges if your systems like accounts receivable, credit, collection, and your invoice systems, if they are not integrated, then you'll end up in doing a lot of work manually. But having an SAP FSCM, you can avoid all those negative things and start working towards doing appropriate collection from your customers. Difficulty in predicting the cash flow means if you have a system where it can give a complete information about how much cash is going to get in coming few weeks or coming few months or coming few days, then your treasury department will have certain visibility about the commitments that they can make to their vendors, or they can also think about going for short-term borrowings, or they can think about doing in short-term investments if they have excess cash flow over commitments. So these are all the reasons for an inefficient supply chain management activities that will overcome with the help of SAP FSCM. Now these disadvantages on the other side will become the advantage. The benefits of your SAP FSCM. It will reduce any sort of payoffs. It will reduce your billing cost. It's a faster balancing of invoices, improved payment processing, improved exception processing, efficient cash collection, collaboration with the business partners, tracking of financial posting from order entry to reconciliation, reduced transaction cost, in-house cash, reduced payment transaction cost. It means these are all the advantages. On the other side, disadvantages, whatever we have if we don't have FSCM. By having SAP FSCM, these are the most of the advantages that you will get it. These are very high level, but when you start looking into the system, you will understand that how each and every transaction is important and critical to the business to realize the cash from the customer. Honestly speaking, your FI/AR process are tightly integrated with the credit collection and disputes. You will really enjoy the way that the business process is being designed and how the transaction works in FSCM when you start looking into the transaction. Now, reduced payoffs means, see, whatever the payoffs that are there from the customer, that you can reduce it. As I said, if you have an invoice, then you have to spend a lot of amount on the stationery and mailing costs. But if you have an automatic system where you can directly present your invoices to the customer electronically, then it's not necessary that you have to go for printing an invoice. Exception is an ad hoc basis. If the customer says, "Hey, I need an hard copy of the invoice," then you can print it and send it to them. Or otherwise, you can send it to him electronically. He will print it. The reduced billing cost is a part of your biller direct module. Okay, it's not credit collection dispute; it's a biller direct module. But you can have a part of this process in your collections and dispute management. But you need to have certain baddies, the business add-ins that we will see when we go to the training. Now, faster balancing of invoices. When your systems are in sync and you and your customer are looking into the same screen, then it is very easy to reconcile. Example, if you have a module called Biller Direct, customers will log in into your SAP system through portal. And you will be logging to SAP system directly, and you both will be looking into the same account.
Oh.
Then he may have, if he has any questions, then he will say that, hey, this invoice number is having so-and-so issue. Then you can also look into the same screen and say that what that invoice is, when it is generated, what material that you have supplied, that you can talk about. But for that, you need to have a Biller Direct. How Biller Direct works is, we will see in the next screen, very high level. Improved payment processing. The improved payment processing is, SAP FSCM has a feature called a generation of a work list as per the choices of the collection manager. What collection manager does is, he will define strategies as per the corporate policy on daily basis, and that work list consists a list of the high value payments from external customers, or high value of payments that has to come from intercompany customers, or low value amounts and that's pending for a long time from different customers, and overdue items that they have been with default customers. All those things it will display to the collection manager. Then, as a part of your designing in collection management module, each customer will have one collection representative from the organization, that is from the business. This A person is responsible for collecting money from these many customers. Collection agent B is responsible for collecting money from so-and-so customers. That you will assign as a part of your FSCM collection management module design. So when a work list is generated, each and every collection agent will be given certain customers on daily basis to call them and find out if they have any problem. So by having that type of process, your payment process will really improve a lot, so that the customers will not skip, and the business will not be able to ignore any customers where they have concern to make a payment. By having that type of process, you can expect speedy payment from customers. Now, efficient cash collection. As I said, that you will be able to collect the cash very efficiently, expecting on what day which customer is going to make payment. And you can inform that to the treasury, or you can put the date in the collection management module stating that customer promised to pay on so and so date for so much of amount. Then the treasury will have a visibility. Oh, okay, this customer, these many amounts are going to come, or these many payments are going to come in next few weeks or next few months. Okay. Now, collaboration with the business partners. Business partners are nothing but your customers. You can maintain very good collaboration. Cash, we'll see that in the next screen what actually knows cash, how it works. Do you have any questions so far?
No.
Okay, good. I think you're not good on your throat. I think, are you okay?
Yeah, I'm okay.
Good. Okay, now what is FSCM? FSCM is the full form is Financial Supply Chain Management. It is a set of applications that can address virtually every process of your entire OTC cycle. You know OTC cycle, right? Right from order to till you get the payment.
Yes.
Okay, good. It's a set of application which helps in collection process. This process starts from maintaining master data and end with the payment received. The master data will in FSCM happens in two places. One is in your SAP R3 or ECC6, and the other one is happens in business partners in FSCM. However, you don't have to maintain in both the places. By having a system design as well as system settings, if you create a master data in SAP, with the help of data synchronization functionality, automatically it creates a business partner in FSCM. Similarly, vice versa. In case if you want to create customers only in FSCM, you can still create, and with the bidirectional functionality between FSCM and SAP, a customer master will get created in ECC6 or SAP, whatever it is. It happens in both the places. Okay, there is a functionality called master data synchronization between SAP as well as FSCM. That we will see when you go for config settings.
Okay.
Applications are modular in design, allowing us to configure and deploy individual components to meet our business requirements. This is a common statement. And now coming to the other applications relating to FSCM. SAP Credit Management, that is FSCM Credit Management, FSCM Collection Management, FSCM Dispute Management, FSCM Biller Direct, FSCM Invoice Cash, FSCM Bank Communication Management, FSCM Cash and Liquidity Forecasting, Treasury and Risk Management. There is one more called Debt Recovery. In fact, that is an industry specific, or very few customers will implement debt recovery. Okay. Now coming to the each module, you know the functionality of the credit management module. There are two modules. There are two ways of thinking credit management. Before ECC6 and FSCM, they have standard SAP credit management, where you will have several features like defining a credit engine, which will take care of defining the credit formulas. And second thing is integrating with external credit agencies like Dun & Bradstreet, Payday, whatever it is. It is not real time. There won't be any real time integration between your SAP and external credit agencies. And the third one is you don't have a business partner concept in SAP Credit Management. However, on the other side in FSCM, you will have all these features. Like you can define your own credit rules for each customer by taking into several parameters, like how long he has been in the business, what is the financial capacity, how many employees are working with them, how long he has been purchasing material from us. Similarly, what is the credit score of this particular customer provided by the external credit agencies. And similarly, if you would like to have a separate control to your credit manager on that customer. So all these things are possible using FSCM. These are the powerful features that is provided by SAP, which are not available in standard SAP credit management module. As I said that, go ahead.
What you were saying about Dun and Bradstreet, that if they don't have, they rely on, they get the information.
Okay, what happens is you are not an SAP credit management in terms of from your as end users. You are using an external, credit management module.
Right.
Yeah, but as I said that I have been into SAP for the last few years. I know that SAP till 4.6c, they provided credit management module as a part of standard SAP module. From ECC 6 onwards, they provided FSCM add-on components. I am talking about the difference between standard SAP credit management and FSCM credit management.
Okay.
Okay. In standard SAP credit management, the features as I told you, defining the credit rules, considering the various parameters, and considering the external credit agency credit score, these things you cannot store it in standard SAP credit management. However, in FSCM credit management, that you can do it.
Okay.
Okay. And the second thing is, you don't have a business partner concept in case of standard credit management, but in FSCM credit management, you have that. And the third thing is, in case of standard SAP credit management, you need to build a separate interface where you will go to your third-party credit agencies and give you the global customer ID, get the credit score, and update your standard SAP credit management. But I'm talking about FSCM credit management, where they provided a link, a web link, which will in turn will go and talk to Dun & Bradstreet database and get the credit information for the customer and will update your system in real time.
Oh, okay.
Okay, so that is what I said. These are the a few advantages of FSCM credit management. Okay, and your legacy system, I don't know how it works, but in standard credit management, it's not possible to have a real-time integration with the external credit agent. Now,
yeah, we don't have that. Right, they call and find out the information to set the credit limit.
Okay. Right. What they do is, whenever a new customer comes or existing customer credit limit is to be increased, your credit department will call the Dun & Bradstreet and give the global customer ID, and I'll ask them to give the information relating to the customer. Then you update that in the system. Okay. That is then what you are doing it everything manually.
Yeah.
Unlike that, if you have an FSCM credit management, you can straight away talk to the database of Dun & Bradstreet or Payday or whatever the collection agencies, credit agencies information and update your database so that you can determine the credit for that either existing customer, new customer, whatever it is. Okay. Now coming to the collection management. The collection management module is integrated with your AR as well as the dispute management module. What it does is, on daily basis, it gives access to your collection department to generate work list. The work list consists of the customer, days outstanding, and the customer to be contacted, and the name of the person to be contacted. And if you have a kind of a feature like dialer, automatic dialer, then you can integrate the dialer to the FSCM collection module, which in turn will call the customer automatically and connect it back to you, so that you can talk to the customers without much user interface or user intervention. Okay, so that is one advantage. Most of the companies, what they do is they will set up their own collection department, and they could be either your internal team or it could be outsourced team, and they give access to the SAP collection management module to them, and they set up the standard rules, which customers they have to call, when they have to call, and what they have to ask, and those people will call the customers as per the work list information and update the work list on daily basis. So it is another advantage having a separate FSCM collection management module. You can straight away outsource it, so that you don't have to maintain your own team of people who will call the customers to find out why the payment is not being made. As I said, SAP dispute management. SAP dispute management is another a big tool. I consider a big feature that is provided by SAP, and it is independent to your any of the SAP applications, but can be integrated with AR, integrated with collection management module. It can integrate with the collection and disbursement of financial services of insurance sector. It can also be integrated with SAP CRM, customer relationship management module. So these are various modules where you can integrate if you want to choose SAP dispute management. What the dispute management does is, if the customer calls up and says that, hey, I have so and so query and issue with this dispute management module, then your AR department can log a dispute case and can see that whether the dispute is for the whole invoice or partial invoice. They can link it to the invoice number. If they say the partly they make payment, they can make partial payment and create dispute for the rest of the invoices. And you will have that a priority, defining the priority. It's a high priority, low priority, medium priority, the critical, and you can create the dispute and assign it to appropriate person in the organization. So that using a workflow, it will trigger an email to that particular individual who is supposed to act on or before so and so date. If required, the person who creates the dispute case also can set expected date of resolution on that. Okay, these are the advantages of having a dispute management module. And it is integrated with accounts receivable modules in SAP. Suppose while the dispute case is created, if the customer still wants to make a payment, either full payment or partial payment, that cash application happens in accounts receivable. On regular basis, it integrated with your dispute management module, and that payment will get reflected in the dispute case also. As if that there is a $10,000 of invoices, customer dispute is only for $1,000. It may be quality, or it could be a defect in the material, or may be partially defected, or tax may be imposed more, or there could be a price issue, or it could be a delivery issue, whatever it is. Customer says that, hey, this is 10,000 worth of invoice, but only 1,000 is my dispute. Why should I not pay the rest of the 9,000? Even after the creation of the dispute cases, customer can make payment of $9,000, and system will automatically update that in the dispute case. Okay, this is all about your dispute management module. Now coming to the Biller Direct. The Biller Direct is a portal-based application which will consist of the Java as well as our ABAP. What it does is, using your Java component and ABAP stack, with the help of your technical team, where you set the complete information and complete application, it will pull the customer account on the portal and display it to the customer. So that customer can see what are my total invoices, what are my payments, what are the debit memos, what are the credit memos, what are the disputes I've created, whether the dispute has been resolved or not. It will trigger an email, and customers can log in and see the account on their own. Those are there in your SAP system. Okay. By doing this, you can avoid your paper invoice, and you can also avoid customer calls. And at the same time, if the customer would like to make a payment on Biller Direct, they can do it. From business standpoint, what happens is, you also need to set up a third-party interface with your visa companies or third-party who will take the responsibility of getting the money from customers and crediting it to your bank account. So these are all about the Biller Direct, and the Biller Direct is more widely used and it is getting popular. And you need to have AR knowledge as well as little dispute management knowledge, and you also need to know how the portal functionality works, what type of reconciliation activities have to be done, what are the files that have to be processed on daily basis, both from your bank as well as from your visa company, so that you can see that which customer has paid how much money from credit card or debit card, whatever it is. Okay. Now coming to SAP in-house cache. SAP in-house cache is widely used, as I said, where you have a huge customer base as well as you have more and more subsidiary companies. Suppose you have a subsidiary company A, B, C. A is in US, somewhere in US, B is in UK, and C is in India. And your corporate office is there, suppose in your, either in San Jose or wherever, it's somewhere in your Bay Area. Now what happens is, if your corporate would like to know where is the excess money within the subsidiary and which subsidiary required funds. Okay, and similarly, if one subsidiary has to make payment to another subsidiary, it is very much possible that subsidiaries, that is intercompany receipts will be there, intercompany payments will be there. Okay. Now, if you don't have in-house cash functionality, what happens is the money has to move physically and the account settlement has to be done. If any subsidiary need money or if any subsidiary has excess money, this amount has to flow physically. Unlike that, if you have an SAP in-house cash functionality, your treasury team will be able to understand how this transaction can be processed without having a physical movement of the cash. Okay? Suppose head office is there, head office can take care. The only thing is accounting entries takes place. Between the subsidiary subsidiaries, what are the intercompany receipts and payments? Head office, they will send it to head office, and head office will send the data to subsidiaries. Subsidiary A has to make a payment to B means subsidiary A will send it to head office to in-house cash, and in-house cash will in turn make payment to subsidiary B. Similarly, the receipts also, and they do a settlement periodically. Okay. So similarly, what happens is, another example, a UK company keep getting goods from an external vendor there in US. US vendor keep supplying material to the UK subsidiary. Now UK subsidiary has to make a payment to US supplier. The supplier is a third party, not the head office or any of the internal company. Now when they have to make payment from UK to US on daily basis, they will have exchange gain or loss. Unlike that, subsidiary which is there in UK will request either head office or another subsidiary in US to make a payment on behalf of the UK. So that what happens, you can avoid intercompany, you can avoid exchange gain or loss, and the subsidiary which is there in US will make payment to the vendor for the supplies made to UK subsidiary. Let's take an example. You are there in US, I am here. You are in US, I am in Canada. Assume that. You have to make payment to some of your friends. You have to make payment to me in Canadian dollars. Okay. So if you send it from US to UK, there will be some exchange gain between US currency to Canadian currency. Instead of that, what you will do is you have one of your friends and ask them to make a payment to Raghav, so and so say $100. Okay. I am getting in Canadian dollars, and you are making a payment in Canadian dollars. There won't be exchange gain or loss immediately. But when you make a payment to your friend, at that time there could be exchange gain or loss. You can do that when there is a favorable balance. Okay. In that way, you can gain the currency fluctuation or difference of currency. The same thing applies even in your in-house cash functionality. Subsidiary A can make a payment on behalf of subsidiary B for the external vendor who supplies material to subsidiary B, who is there in UK. Okay, and the external vendor in US who raised an invoice in US dollars and getting a payment in US dollars. For him, there won't be gain or loss even for the vendor. So those type of transactions you can handle using SAP in-house cash. It is a huge functionality. You need to know EDI functionality of your electronic bank statement that comes from the customers. You also need to know about the logbox functionality, and similarly, you also need to know intercompany transactions, and all these things that you have to do if you're using SAP in-house cash. Coming to bank communication management. The bank communication management, you must be knowing it, right? When you're getting a logbox file, it comes from the bank. Similarly, when you make a payment, it has to go to different banks, from the banks to vendors. So all these files, when you have huge number of customers and huge number of vendors, and if you have n number of banks involved in it, then you will be sending several files to the bank, either in terms of outgoing payments or incoming payments, which typically involves a lot of bank charges, which are expensive. If your client or if your business decides that you want to replace those process or the bank files, and you directly want to route everything to Swift, then you can do it using SAP Bank Communication Management. Now coming to cash and liquidity forecasting, before ECC 6, before FSCM module, it was there as a part of 4.6c. Now SAP put that as a part of FSCM module. This typically talks about your incoming payments and outgoing payments and their commitment and forecasting, so that business can maintain a good amount of liquidity, so that they don't wait in terms of the commitment. Now treasury and risk management, it is external corporate, and it is more related to your hedging, swaps, interest swaps, then credit risk analysis, market risk analysis, then you will have a positions and stock market related external borrowings and all that stuff. Unless you are into external corporate as well as in very high positions in the organization, in fact you may not be interested to know treasury and risk management. Okay?
Okay.
Any questions as of now?
No.
Okay. Now, during our training, we will all talk about the business partners, integration and basic configuration of your FS and SD, relevant business areas, FI, SD and process integration. PI is a third-party subsystem, not third-party, SAP subsystem, which has to integrate your ER, FSCM credit and SD module. If you have EHP 5 and above, then you don't have to have XI or PI. PI is, as I said, XI is an older version, PI is a new version of SAP NetWeaver, which will talk about interactive and interfacing with an SAP application. Credit engine and credit rules and transactional information. These are all the things that we look into the FSM credit management. And at the end of the course, what we do is we recap master data and transactions, interview questions, relevant technical information, and OSS notes. So these are all about your training curriculum. Okay, and we will send a daily schedule, and we also see that how many hours required for which topic, how many weeks it takes, and if you go for weekly 2 days or 3 days, whatever it is, it depends upon the your course is being designed, and you will be given training accordingly.
But I thought we were going to collect, cover all. Is
No,
not
cover. Okay, I tell you, if you're talking about all these 3, 5, 8 modules.
No, at least 4: biller direct, credit management, collection, and dispute. Those 4.
Okay, let me tell you, credit, collection, disputes goes together one set of training.
Okay.
Biller direct goes a separate set of training. SAP in-house cash and bank management put together go a separate set of training, and cash and liquidity and treasury and risk management will go separate set of training, because the SAP course is also designed accordingly, and your modules also have a relevance accordingly. Your credit management, collection management, dispute management put together, your service provider will also charge fee accordingly, and biller direct they charge separate. Okay. And FSCM credit, collection, dispute management put together, it goes to more than 20 sessions, and biller direct will go anything between 15 to 17 sessions.
Okay.
Okay. Because different modules have a different course and the syllabus as well as the fee structure.
Okay.
And biller direct is entirely different, because it goes more with your AR, portal, ABAP stack and Java stack. You have to, you will have little technical information how the data will be pulled from your SAP account receivable and displayed on the portal. And it also has certain limitations because you don't have a portal system here. In the demo system, you don't have a portal functionality. And the second thing is, you also need to have your Java and ABAPers to know what is to be done. The SAP Builder Direct is purely from FI perspective, it would be given. Different type of users will be there, how the users will be set up, and what type of SAP settings have to be done. You have XCM. XCM means Extended Configuration Management, where you set up all these, accounts and user related information. You don't see impact on, you don't see a real-time experience on Builder Direct, but whereas you can see the rest of the modules. Credit collection dispute, you can see that, but Builder Direct, you cannot see the way that appears in the external environment, that is in the real-time environment, because you need to have a portal, you need to have a wrapper, you need to have a Java consultant, and you also need to have the licenses to pull the data from AR and display it on the portal. Portal means web. I'm not sure, but you can look into that on internet, or if you know anyone, you can check with them. Unless you have a real-time experience, they may not be able to tell any of these modules. If somebody is telling me, it's a kind of blocking. And we will tell, I can explain you all these things, the real-time challenges as well. Because I have implemented all these modules except debt recovery, which I have not worked any time, but all these modules I have worked in. A couple of things I'm still working on. SAP in-house cash management, bank communication management, I'm still working on this module. Okay. Anything else that you would like to know specifically?
No, not.
Okay. Well, then I'm done with my demo, and you can talk to a service provider, and the schedules, the syllabus, and anything that you would like to talk, you can talk to them. Okay. You feel free anytime if you have any technical questions with me. Thanks for your time, and you have a very great evening. Bye-bye.
Thank you. Bye.
The organizer has ended the session, and